And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. Now, I will tell you, the markets ended the week mostly flat. We'll talk about some of the news that drove price action back and forth last week. However, there is a lot bubbling up beneath the surface. As usual, I will share that with you, as well as stocks in those areas and what is driving those newer areas higher. As always, we do want to see the markets broaden out beyond a select area. We are still sitting at about that midpoint as it relates to the equal weighted S&P 500 and the percent above that 50-day. But again, the fact that it's not super focused on a continuation area is going to be of interest. Again, last week we did get some news. Retail sales numbers did decline in May. We also saw a drop in industrial production, but the real news was the Federal Reserve's announcement of their notes and Fed Chair Powell's speech after the FOMC meeting. And it was during that period that it was discussed the fact that inflation is creeping up. So it is definitely still at the forefront of their minds. They did not change interest rates this week. And there's also an outlook that toward the end of the year, we will in fact still get those two interest rate cuts. So that is certainly good news. But again, we are going to want to keep an eye on inflation. Next week, we get key PCE data, and that is the Federal Reserve's preferred metric for inflation. You want to know that. And then also Fed Chair Powell is going to be speaking in front of the Finance Committee, and notes there will certainly, I'm sure, make it to the headlines. You will want to keep an eye on that as well. And then, of course, other news that is keeping the markets rather muted is the Trump and the decision as it relates to US's potential involvement in the Iran-Israel conflict has been pushed out for 2 more weeks. So that is a backdrop uncertainty there. We'll take a look at what took place relative to that conflict in the markets as well. So let's go ahead and get started. Take a look at where we closed for the week. And here we are, a daily price chart of the S&P 500. And you can see that we drifted a little bit downward, but did end the week flat. We do still have a positive RSI and a positive MACD. So at the end of the day, while that super strong shift into an uptrend back here from April into May has turned into more of a resigned period, back and fill, a little bit of drifting lower. However, net, that uptrend still remains firmly in place. Taking a look beneath the surface of the S&P 500, we're looking at those 11 sectors sorted by relative strength, and it's a 2-month daily price chart view. Let's go ahead and take a dive here. And first up is the fact that energy is remaining at the forefront. It was among the top performers, not the top performer. This is where it's going to get interesting. However, again, we are still seeing movement into energy. We'll take a look at the price of oil in our next segment, and that, of course, is going to impact XLE. Next up, technology. XLK still at the forefront. We're sitting up here at new highs for the tech sector, and that's going to be all about semiconductors. We'll take a look at software and other leading groups in the technology area. And then here we are with the S&P 500. Quite simply, those sectors listed to the right are going to be underperforming. It's all going to be relative, because as you get down to, for instance, healthcare, very much underperforming. This was the weakest area, down 2.5%. I'll share with you those areas in healthcare that are getting hit. A lot of that having to do with policy in DC, but certainly other areas of weakness as well. Communication services up here at the forefront. Let's go ahead and take a look at the top performing group sector last week, and that is financials. Now, it looks a bit bumpy here overall. However, the group was up more than 0.5% relative to a flat, broader market. And you can see quite a bit of bumpiness here, but I will share with you one group that really emerged last week within those financials, and we'll talk about why as well. Some of these other areas that are starting to pull back a little, XLB, this is the materials, and that was up there at the forefront, certainly driven by gold, silver as a proxy to gold, that safe haven. But we are beginning to see a pullback take place here. Now we have that negative RSI, and it's that type of signal that if you are in that area, you'll want to certainly be aware of. So let's move beyond these sectors and take a look at some of the underlying groups within those sectors. And this is really important relative to the ability to fine tune your investment strategy. It's not just going to be that big overview. We're going to take it down into a more refined level. And again, that RSI up here with these groups sorted in descending order. So let's go ahead. I talked about semiconductors having a good week, certainly relative to the broader markets, up about 2%, finding support above that 10-day simple moving average, still sitting up there really quite nicely. Next up, as it relates to areas and industry groups, you can see the NASDAQ sitting up here as the leadership area among those broader indexes, all about that continued strength in technology. And then as we move through, let's take a look at retail XRT. And you can see that it did bounce last week. We were up almost 2%, but it is an area where you absolutely need to pick your spots. It's not going to be broad based. There are certain areas within retail that are bubbling up, but overall, general weakness does still remain. And then I talked about software stocks faring well. IGV is the expanded tech software ETF, but this is an area that also pulled back as we went into the close for the week, and the group ended down about 1%. Now, this is a very big group. Over 350 stocks are in this area. But as we move through today, I'm going to share with you an area that has really exploded of late, and we'll talk about why within software. So moving through, small cap stocks were up last week, and certainly among those broader indexes, up just a hair more than the broader markets. Of note there is that bank stocks does comprise at least 15% of that Russell 2000. Moving through, I talked about basic materials, and here we are with gold, and you can see that continued pullback. Nothing dramatic, but just something of note for those of you gold bugs that are out there. And then we can also take a look at volatility. This is the VIX. We are bouncing around up here, sitting at about 20. So anything above that 18 level is considered elevated. So you do want to stand on guard relative to that. Talked about healthcare pulling back. Let's take a look at IBB. This is the biotech ETF, and you can see that it is pulling back. This is a riskier asset area, so it will descend and ascend depending on investor confidence. And at this point in time, given the fact that we do still have quite a bit of uncertainty, that earnings season is mostly behind us, we could see that investor confidence continue to waver. Here we are with KRE, that banking ETF. Now, this is the regional banking ETF, but you can see nice movement over the last 2 days. Potentially, it did push that RSI into positive territory. Again, we will take a look at where that strength is bubbling up from. Now, as we move through, these areas down here are your weaker areas. XHB, we did see a little bit of a pop today, but net, that downtrend very firmly in place. And then IHI, this is medical products, another area within healthcare, and this also was down about 1%. So from here, let's go ahead and take a look at some of those areas this past week that saw significant price movement, certainly relative to a flat broader market. So first up, I am going to share with you a view, and I'll share with you how to get there. Under these member tools, there are many different ways that you can not only look at the markets and look at individual charts, but also you can use it for screening purposes as well. So today I will be sharing with you a view that some of you may not be familiar with, and it's called PerfCharts. Quite simply, it dynamically compares multiple symbols, and this is going to take us into an area that fared well last week. First up, before we get into that, I will share with you a view of those broader market indices, the NASDAQ, the S&P 500, and then of course, NYSE and Dow Industrials. And what we are looking at here is a view going back to September of last year to current. Now, from here, you do have the ability to modify where you are looking. You can go back quite a bit more in time if you want to see year to date. That is another option. But let me go ahead back to that initial view. Now, this move here, if we take a look, what you can do is put your cursor over this line, and at any given point in time, it will provide you with the net number at that point in time. But certainly visually, you can see this is the NASDAQ sitting up here at the forefront over this time period, up 13%. This is September till today's close. And then from there, you can see the S&P 500 up next, up about 8%. Followed by that NYSE, and then last up is the Dow Jones Industrial. So quite simply, you get that nice view from these indices. Also, we can take a look at a bar chart. Usually I have a lot more up there, so this might look a little bit jarring, but it's yet another view that you can utilize really quite easily. So let's go ahead and dig in, take a look at some of the names that I did want to share with you. We'll talk about why. This perf chart view is a basket of names in a sub industry grouping that did fare well last week, and it is going to be gambling related stocks. We are looking at DraftKings, Caesars, Penn Gaming, LVS, and MGM. And again, quite simply, at this point in time, DraftKings is exhibiting leadership characteristics. Take a look at Caesar. It is down here, not as elevated. So when you're looking from my work and my many years in the markets, ideally you do want to be more involved with that leadership name. It's indicating strength, oftentimes for a very sound reason. So from here, let's go ahead and take a look using the Stockcharts view on these ticker symbols to get a little closer look. This is a view of DraftKings. You can see that we did reverse that downtrend on Thursday, and then a nice continuation rally today, up almost 2.5%. Now, the news that I did want to share with you, there's been several news items that's really helping propel this group higher. First up, on the 18th, that would be this Thursday move, and we'll take a look at those other names as well. The American Gaming Association came out and talked about commercial gaming reaching a new April record of 6.2 billion, up 5.5% versus last year. Now, of course, that's good news for these gaming related stocks. And as we move through, I will get into other news, but there's also been evolution in the gaming industry where they are accepting crypto. Let's go ahead and take a look at some of these other names that have been faring better than the markets this week that we looked at in that perf chart view. First up here is Las Vegas Sands, and you can see that it's just marking time, not as dynamic as DraftKings. And we can also see that we had a nice base breakout here on Tuesday that dissolved going into the close, but net, very constructive price action. I would want to see that momentum shift to the upside to indicate more near-term potential, and then also get back above that 200-day simple moving average would be another ideal characteristic. Let's go ahead and take a look at Penn National Gaming, PENN, and a couple of interesting developments with this particular name. I'll go ahead and mark that up. We're looking at a daily price chart, and we can see that we hit a low, certainly with many names back here in that April period the end of that bear market. But subsequent to that, we have seen higher lows, again, in line with the broader markets, but not every stock has exhibited this positive characteristic. So here we are with the name now elevated above that 10-day simple moving average. I would look for a pullback, but we do have a nice positive RSI and MACD, and you will want to pay attention at that 200-day because oftentimes it can act as a roadblock, but net PENN sitting up there really quite nicely. We talked about the other stocks that were on that list. Let's go ahead and take a look at MGM Resorts. Had a nice pop here earlier in the week, and then a very orderly period of consolidation. It's setting up really quite nicely. We have that nice MACD crossover, black line up through the red, signaling a new uptrend. And the news here is that the company's subsidiary, it's known as BetMGM, and they raised their 25 guidance numbers going forward. And this happened on the 16th, which is this nice pop into a potential base breakout at that 35 level. So keep your eye there. Some of the other developments within gambling and these gaming related stocks is the fact that they are using there is an ability to use crypto for investing now. They're trying to expand avenues of growth, and that certainly is one of them. Here's a look at LVS, Las Vegas Sands, and it's another name that is back and fill base building, had that nice pop on Tuesday and still finding support above its key moving average. Last up, we'll take a look at CZR. And as you may recall, this is one of the weakest among those names when we were looking at the comparative chart. Caesars Entertainment. Now, the company has had issues in the past with privacy data leaks, cybersecurity problems, but more to the point on this chart now is take a look at this nice high volume on the advance for CZR this past week. Toward the end of the week, we can also see a now positive RSI and MACD. I would ideally like to see us get back above that 31 level, but also bear in mind net, it has been exhibiting relative weakness. So for me, I would overweight those names that are exhibiting strength. Again, oftentimes similar to MGM and others, it is going to be based on fundamental and bullish outlooks there. So another area that is on the move higher is going to be AI related stocks. And as we move through, I'll share with you a specific area in the AI space. But first up, we're going to take a look at some of these software names. It is continuing to be a driver for individual stocks. First up here, we are looking at Hinge. Let's see if I can get a better daily chart there. And do not have that. I was hoping that I would have a IPO chart, but we can take a look at a 60-minute and certainly you'll see this sharp advance. This is taking us through last week's price action. This is a 1-hour price chart. We did consolidate going into the close today. The company is known as Hinge, HNGE, but to me it's clearly indicative where AI in the descriptive definition for that particular stock is going to have an impact. So with Hinge, they do have AI software for joints and muscle health. So that is one name that we can take a look at. I'll share with you a couple of other names just again to bring home that point that AI related names are on the move. This is Lemonade, LMND, and you can see this pop over the last 2 days. The company does use AI to provide insurance quotes. Another name that we can look at came out with earnings this week, and a number of these are going to be a little bit smaller, but again, really showing you quite clearly how the move into this area is shaping up. GRRR, Gorilla Technology, a big gap up. Actually, it's up 34% today. This is all about earnings, and the company does provide AI-driven solutions as their driver. They came out with terrific numbers. So in essence as well, it's signaling that the move into AI-related stocks is here to stay. We are seeing actual reports of earnings coming in. We did see it with the news that the M7 names are going to continue to spend lavishly on AI. Here's another name, DDOG, Datadog. This is a software company also providing those AI solutions. We have reversed this downtrend officially with this nice midweek base breakout, continuation rally. We are back above that 200-day with a positive RSI and MACD. Last week, we did have stocks on the move higher due to strong earnings reports. Even though we are really getting to the end of earnings season, it is still a key driver of your bigger movers for the week. Carmax, KMX, big gap up today, super high volume, not the prettiest of charts, more noteworthy for the fact that these companies that are showing growth are experiencing nice high moves. Here we are with Kroger, KR. Another characteristic is the fact that the stock was not sitting up here at new highs when they reported earnings. Instead, they were down fairly in corrective territory down here. Today's move in KR did push the stock back up above that 50-day. Take a look at that volume. We have that nice MACD black line up through the red, a nice bullish RSI. From here, you will want to take a look at other stocks more recently that had similarly big moves in response to earnings. We're taking a quick look here at Oracle, and really the volume here was just superior, but we can also see that we had a nice 2-day advance, and since then we are consolidating. I mentioned that software stocks overall suffered, and this is where that intraday chart can become helpful as far as identifying near-term views beyond that 2-day advance. So first up with Oracle, we're looking at a 60-minute 1-hour chart. I use a 5 and 13-hour simple moving average, and we can see that that RSI is now in negative territory. We are below those moving averages with that MACD poised to turn negative. So that is indicating near term, again, intraday, it's going to be super near term. We are poised for further downside with Oracle. And of course, we are very stretched above this moving average. But certainly one way that you can get your arms around these names that gap up significantly, you will want to have historical precedent of other names that have done so recently. Let's take a look at another AI, and I'm telling you, this is a stealth AI related name. It's a stock certainly that has been around for a very long time, and it is Deere, DE. Of course, they provide agricultural equipment. Take a look at this beautiful setup here, right side of the base forming. If we can get that MACD crossover, the company is on the verge and actually may be offering autonomous tractors among other AI related criteria, such as helping with crop rotation using AI and a lot of technological advances. So while many may think of the old Deere, they have really stepped into this new age and are benefiting by way of seeing growth, and we're sitting up there really quite nicely. Another area that I did want to share with you that has been on the move higher. Many of you may be very familiar with this. This is CRCL. Again, I'm going to drill down to that intraday to give you a really good flavor for the stock. We can go ahead and drill out and take a look at that 1 hour. But again, you'll see that sharp advance. We did look at the weekly. It is up 80% for the week. And then also wanted to highlight, that's not going to be the most beautiful view, but it certainly is giving you that metric for the weekly advance. What I wanted to do is share with you why this stock was up and some other areas that are also being positively impacted. The Senate last week did pass stable coin framework, and that has been something that is really being embraced. Stablecoin, of course, is different from Bitcoin. As the name implies, it is a more stable asset, and it is something that banks are embracing. We talked earlier about, actually last week, the fact that both Walmart and Amazon are considering using stablecoin so that they don't have to pay that hefty credit card charge that is often close to 3+%. So let's take a look at some of the other names that are advancing with that Senate passage. And first up is Coinbase, well known, of course, as a large cryptocurrency exchange. And we can see this sharp advance on the news on Thursday into a base breakout. Nice follow-up rally beyond that. Some of the other names that did advance on the news are going to be some of these bigger banks. This new regulation will allow these banks to consider and move more into this stable coin area. First up here is JP Morgan, JPM. We had a nice base breakout on that news Thursday, a nice continuation rally. These are the leadership names I'm sharing with you, as always, because these are companies that in the past have stated that if stablecoin does see more regulation, they are going to expand their usage. Bank of America is another name, BAC, gapping up, nice heavy volume on that advance. Last up, we can take a look at Goldman Sachs, another name that is advancing with that news. From there, you would need to drill down, but let's go ahead back and take a look at JP Morgan. There was another news item that came out last week, and that is that the company announced a trademarked JPMD, and that is all about utilizing that stablecoin and digital assets elsewhere. They have now a new subsidiary devoted just to that. And you can see that the stock is setting up here quite nicely. Nice high volume characteristics on that move higher. And in fact, if you wanted to look at up further, that Senate passage is called the Genius Act, and you can drill down a little bit more. But let's take a look at some of the names last week that faltered on news that Amazon and Walmart are considering using stablecoin. Here we are with Visa. Of course, these credit card providers stand to lose the most as investors shift toward that stablecoin and away from those high fees. Another stock that we can look at is Mastercard. And unlike those names that gapped up on Thursday on the news, these are under very heavy distribution. Look for further downside in that area. And that is it for this week. Everyone, I hope you have a fantastic weekend. If you like what you've seen, go ahead and hit that like button. And of course, comments below are always welcome. Have a great weekend. I'll see you here next Friday.